everyone? Welcome to the Stock Market Morning Prep video for Friday, May 2nd. Today is non-farm payroll day, 8:30 a.m. Eastern Time in the U.S. Reported out this morning. It is a big number. Usually, markets really pay attention to that, traders, investors, and it usually sets the tone for the month. The way the market's been going, it's pretty crazy. We had another day of chop, really going nowhere. We had one little dip lower this week, and then the market just kind of hovered around, waiting for that data to come out this morning. So I am hoping that we can get some volatility. We do have some intermarket divergence, where we have the Russell, we have the Qs making lower lows and lower highs, and we have now the followers, right? The S&P, and we have the diamonds doing quite well, and the transports, one of our other leaders, actually doing well. So we have intermarket divergence. We also have bonds breaking out, making new highs, which that's a no-no in equities. And we have the Japanese yen, which is also inversely correlated with the U.S. markets, hanging in there, really not going anywhere, while the markets tend to try to make new highs like the diamonds did today, this week, excuse me. So crazy market. It's a really tough read, and that's when we have to take a step back and just wait for opportunity to come. Now, I look at this market, and based on the analysis, I see that I think the risk is to the downside. Now, we had some good market calls the last few weeks, actually, prior to the Easter week holiday. Then we had that reversal. Then the markets rallied back again, and we had a couple days down, and now we're just kind of chopping around here. So really faking out a lot of traders, and you got to keep the book light. This is exactly not the time to be heavily aggressively long or short at this point. Having a little bit for balance of your portfolio is one thing, but even day trading seems to be pretty much quiet right now, waiting for this number. Now, I do expect fireworks coming in the next few weeks. There is absolutely no question about it. And one of the catalysts is going to be the dollar, the U.S. dollar, and I'm going to show that to you in a moment. So let's just get right into it. Here is the 30-year bond future, okay? Take a look at what we have here, and I showed this to you many times. We have a huge inverted head and shoulders, which is bullish for bonds, bearish for equities, okay? Now, if you look at this chart right here, left shoulder head, right shoulder with a slanted neckline, we actually took it out yesterday, okay, with conviction. That is not a good sign. Yet, the equity markets did not sell off yesterday. So it's kind of crazy. If you have been a trader for a long time, you know bonds up, equities lower, no question about it. Well, with this manipulated market that we have right now, it seems that nothing matters anymore. We had a bad print in GDP early this week. I think it was on Wednesday, and the markets don't care. It's just eventually it's going to care, and that's where the red flag comes in, and that word of caution. Use caution in your trading, because it could happen at any given moment. Now, does it happen tomorrow, today, Monday? I have no idea. But what we want to do is we want to just take a step back of risk, let the markets start to hum together as one again, because we're not getting that in all these different correlated markets. They're all doing their own thing. When that tells me I got to take a step back a little bit, okay? But you can see here, bonds just broke out. Now, if this bullish inverted head and shoulders plays out, it should put additional pressure on equities. So that's what I'm waiting to see what happens. Now, we don't go straight up and straight up from here. Obviously, we've made some highs in the last. I think this is one of the highs that we made in the last 15, 16 months. So does it roll back in again? Sure, it probably does back test the slanted neckline and then possibly moves higher. But I'm just saying that this is a bullish pattern. We need to use caution, especially if you're a longer-term investor. You might want to take a step back a little bit and just watch. I wouldn't be adding anything to your portfolio at the moment. If anything, buy a little protection here. It's worth it. Now, the Japanese yen, we have this ascending triangle, and we have this inverted head and shoulders within the ascending triangle. We have a Fibonacci cluster along with the 200-day moving average up above, so we do have major resistance. But if it does break out this area here, this neckline, and takes this out as well, you're going to see a big move in the yen, which is going to put additional pressure on equities. Now, it's all about when, right? That's obviously what the case is, but you need to know where the patterns are starting to set up. Okay, it's very important. let's take a look at the dollar. Now, the dollar has a big head and shoulders pattern along with a descending triangle. Okay, and I'm going to just basically, you could see this from here, and I'm going to show you another chart where you can see a bigger chart. Now, if I just take this area and just go down like this, you'll see what I'm talking about. A descending triangle, right? And then you have the bottom line. But we have a big band of support here, and 79 plays into the neckline of the head and shoulders pattern on the next chart I'll show you. Now, here's the thing. If we get a break below 79, we're going to fuel strength in equities. No question about it. Equities will move higher, as well as commodities such as gold and oil and silver, for that matter. Now, that's where the big play is going to come in the next few weeks. I think that whichever way this breaks, now if the dollar breaks higher, you're going to see additional pressure on equities and commodities. Now, I just took a peek of the seasonal trends, and the seasonal trends has the dollar index from pretty strong from May up until I believe it was up until September. The dollar catches a little bit of a bid. 60% of the time is positive. Okay, so that's a pretty good statistics here for the dollar. So if the dollar does break to the upside, remember now we have two bearish patterns. We have a descending triangle and we have a big head and shoulders pattern. But the band is very, 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 we have a thick band of support here, especially the 79 level. So it's going to take a lot for the dollar to break down. Now, if we break to the upside, remember, you're going to have additional weakness in equities and commodities. If we break to the downside, we'll have strength in commodities and equities, okay? And remember, we're in the seasonal time where the dollar picks up a little bit of momentum to the of strength. Anyway, here's the longer-term picture of the dollar. Now, this is the big head and shoulders pattern that I was showing you with the neckline at 79. And again, you can see that descending triangle right here. You see that from here? Just take the points and just visualize it. You'll see what I'm talking about. So if it does break up, remember, we have additional weakness in commodities and equities. And again, breaks down, we'll have some strength in commodities and equities. So I think this is the canary in the coal mine, one of the two, along with bonds, right? Let's just quickly move into the equity charts. Now, we've had spinning tops here. You see, we have a spinning top here, or a doji if you want to call it, and one here from yesterday. Still can't take this 1272 extension out. But remember, if it continues to stay up here and holds, then guess what? We're going to break to the upside again, and we're going to go to the 1618 retracement, which would put additional pressure on obviously on the U.S. dollar if equities moves up. Okay, so again, it's insane to see, if you look at a logic, how we have a fairly valued market and the markets just don't care. We have a bad GDP print, and they just think that Janet Yellen the Fed chair is going to continue to back this crazy market without letting the market digest and move a little bit lower to just kind of unwind this overbought reading where you have this market that's been so highly influenced and manipulated by the Federal Reserve, you know. But again, it is what it is, and that's the trading that we have encountered, and we have to adapt to buy it. So whether it be taking a little step back, just trading the best setups you possibly can, I think that's the best trade right now until these markets get in sync together as one. Because right now we have all different asset classes, correlated, uncorrelated, just telling everything a different picture here. But remember, price is what pays us, and that's why I haven't really been showing you a lot of the indicators. But the two indicators that really speak out the most is the NDX above the 50-day moving average, which is the NASDAQ. Stocks above it, they're all making lower lows. S&P stocks above the 50-day moving average, making lower lows, telling me that the only thing that's moving is the indexes. Stocks are barely budging. That's the problem. Hourly chart of the ES, back at the 1272 extension, as you can see, we had a little blip down, and sure enough, all we did was a slow grind the rest of the week. Terrible, terrible week for price action. Absolutely nothing going on. Diamonds. Now, this is a follower, but the follower is doing better than the leaders. Okay, so that's not what you want to see. But again, we're at made new highs just a few days back here, and now we're a few months back, actually last month, and now we're testing the highs again. So that's not what you want to see. Transports recovering a little bit better. Okay, we did have that little pop and low. Remember, we mentioned those little, every time made a little high, we sold off, and we did. And now we're recovering, so we'll see what the transports. Now, the leader is doing okay, okay? But if you look at the IWMs, and this is a good gauge of risk on, risk off, gives a good sentiment of the market. Terrible. This is just absolutely horrible price action at the 200-day moving average already. So, not what you want to see, okay? And an increase in volume on distribution days. So, not a good sign. Qs, same, really the same type of chart pattern here, lower lows and lower highs in the Qs. And again, a good read of the Nasdaq, which is a heavily weighted in tech. Okay, and that's also not a good sign. So again, guys, just the markets are kind of wacky right now, and there are trade setups. You just got to find them, and if they're not there, just take a step back and wait for the opportunity. I think there's going to be some great opportunity again based on the dollar breakdown and or dollar break up to the upside, obviously. So let's just keep that in mind. And again, watch the bonds. Bonds are telling a whole different picture here. Okay. Have a great weekend. We'll have a big update on Monday. Take care, everybody.